So, another week, another freaking banger week, bro. We absolutely killed it. And guys, this week's vlog is not going to be coming out on Saturday. It'll be coming out on Wednesday. So make sure you guys keep an eye out for that. So if you guys do want to watch that vlog, my vlogs are extremely entertaining. And I think you guys are going to enjoy this week's vlog. So it'll come out Wednesday at around 9 a.m. Eastern time. I'm going to go ahead and show you guys the results for the Forex group. Right over here, up about 16 R if you would have held to all take profits. If you guys would have just held a 1 to 2 and put your stops at break even at 1 to 1s, you guys would still be up a freaking bag. I've broken down every single one of these trades. I'm going to break down the last 2 trades that we took for the week, which we took yesterday. Today was not a trading day for me, just due to the fact that, hey, it's Friday. We had a freaking killer week. Why are we gonna go ahead and risk profits on a Friday? We shouldn't. I mean, we should definitely look to see exactly how we can potentially protect our profits at the end of the week, and if we don't like what we see, we move on to the next trade. So we started off yesterday trading US oil. You know how, guys, US oil at the beginning of the week definitely screwed us over, eventually gave us the move that we were looking for. So we were patient with this one and decided to take something called a retracement setup. So when we came to the markets were looking something like this. If you notice, price has this range right over here and this range over here. So these are going to be our targets sitting up here and our targets sitting down under here. Okay, I know that's not the cleanest zone, but if you're noticing, it is pretty freaking nice. So this is when I noticed that price started to break this lower high structure. Lower high structure, price decided to break that point, showing me signs that we can definitely go bullish. Overall, the market here is bullish as well, so anything for buys is going to be safer. So this is when we started to look and see if we can catch a retracement setup. So all I did was grab my Fibonacci here. Once I grabbed that fib from this point to this point, all I did was wait for price to come crashing down and tapping into my Fibonacci level. Okay, now if you're noticing on the 15-minute time frame, we broke all these highs, and we actually even tried to close above these highs, and we closed above these highs over here. So this is showing me signs that we can definitely push up. Also, this 8 SMA is sitting right there. So now all we have to really do is wait for that SMA to catch up so that then we catch a banger trade. So we waited, all we did was wait. Price decided to come down here and give me a rejection of that zone. So once we got that rejection, I took this trade around 6:20 in the morning, so we gotta wait until we get there. So we started to form a small range, but we formed a small range on top of the golden zone here. So that's something that you guys need to keep in mind, that if we start ranging and not wanting to break that golden zone, that means that this is a healthy retracement for a continuation of the move. Okay, so if you notice, price decided to come up over here, come up, down, impulsive move to the upside. Now you get your correction phase of the market. This correction phase is showing you guys a lot. Whenever you get a correction phase, you do know that supports will be held to continue the overall trend. Okay, so this is just a correction phase of the move. So all I did was execute the position once we started to come back up here. This was based off the 3-minute time frame. If you're noticing on the 3-minute time frame, we started to come down here and started to reject these lows. But what I noticed was price wanted to come back up. Once we got that bullish engulfing candle on the lower time frames, using that Fibonacci on the 30-minute time frame as our setup, all we did was put stop loss right below that 618. We do know that if price wants to come down and break that 618, there's a chance that price might want to come down to 764 or even retrace this whole entire move. So we decided to put our stop loss right there. We started to form a range on the 3-minute time frame. We get that bullish engulfing candle, and then we started to look to target our 1 to 2 risk reward ratio. Okay, so 1 to 2 would be somewhere right above these highs over here. My overall target was really this zone over here. Price decided to really just freaking rip up in this scenario. Once we started to break out of these highs, we knew that price could easily start to give us a good move to the upside, because now we're breaking market structure that's pretty much sitting right over here. We have lower high because we couldn't break this high, and we have a lower high here. We were bullying it with that SMA as well. Price starts to come back up and then wants to start trading above our SMA. So once we start to trade above our SMA, that's clear indication where price wants to go. We have a double bottom here that we're also using to potentially push price and drive price to the upside. So we were sitting in this one range. I was actually going to take buys above these highs too and scale into my position, but I decided not to. With the week we were having, we had a lot of profits to protect, so just decided not to do that. At this point, we move our stops to break even because our 1-to-1 was hit. We always move our stops to break even once our 1-to-1 was hit, and then we were looking to target these highs up here for about a 1-to-2 risk reward ratio, which would have been above there. Price never stops us out at break even, very close, but doesn't do it. And then price decides just to go all the way up to the upside. You guys are going to see this move. And then boom, right there, I close my full position. So right there, I close my full position. And unfortunately, price just decides to go all the way to a 1-to-4 risk to reward ratio all the way up here, which I'm not mad about. I'm definitely not mad about the fact that I missed out on another 2 R to R because we're up so good on the week. But if you notice, price decides to come up and tap into our range that we were sitting in for the whole entire week. So we knew that this was a good target zone. We knew that price could definitely come up and tap into this area, but I decided to close my full position at a 1-to-2 just for full transparency, just so you guys know where I got out. But the overall move went for a 1-to-4 risk to reward ratio, which, hey, it's oil. Oil does moves like this on a daily basis, as long as you can not get greedy with the setup, because I know there's a lot of people who saw it come all the way up here and look at what happened after that. Just trying to be greedy and trying to hold this position, you end up putting yourself at a disservice. You end up putting yourself in a position where price decides to come all the way back down to your break-even point, so you would have left all those profits on the table if you would have gotten greedy up here. So I'm the type of trader that likes to go for 1-to-2s. Price decides to do that 1-to-4, but I promise you guys that there was a lot of traders who caught the same trade as me, but they got greedy. They got greedy and decided to hold price thinking that it's just going to fly from here, when price is not going to fly from here, because this is a very strong level of resistance. So in order for you to hold this position, you really need this candle here to be stronger and maybe form some level of support here to then look to hold your position. But this candle right here told you the whole story. It shows you weakness in the markets. It shows you that price doesn't want to push up past this zone, right? This bearish candle is something called a Dr. Dollar candle. We have a long wick, we have a small body showing you signs of reversal. So that's a good point to get out of your position right there. I got out of 1-to-2 and I'm extremely freaking happy about it. But then we moved on to GBP JPY. GBP JPY is another banger freaking trade that we caught. It was somewhere down over here. So this is how the markets looked when we were trading GBP JPY. If you notice, price had this small range that we broke out of, sitting right over here and sitting over here for London session. London session decided to push up. Price decided to give us a small retracement. So now this is higher low formation in this market structure. And then I knew that we had a lower high sitting right over here on this candle, and we started to want to come up and break that lower high structure. So at this point, at around 620, I decided to take a trade on GBP JPY, which is right there. Once we started to come down, we came down and started to flip bullish, and I knew that we were going to come up and break these highs because price has a major rejection to the downside, and we have that SMA carrying it to the upside. So now we understand that if price decides to want to push up, price is definitely going to give us a move above this zone right over here. So we executed that position. We put stop loss right below these lows, down under here, and then all we did was want to catch a 1-to-2 risk reward ratio. The 1-to-2 risk reward ratio was sitting right over here. Now, the reason why we wanted to target that area, if you're looking at it on the hourly time frame, there's really nothing to the left, right? There's absolutely nothing to the left unless you go up to the weekly time frame. But I'm not going to do this right now because I'm in replay mode. I'll show you guys a little bit after of why we took this position. So now we did see some drawdown, unfortunately, which is normal, guys. Don't be afraid of drawdown. Drawdown is a part of the game. And if you're a real trader, you understand that drawdown is meant to be there for a reason. It's meant to build your character as a trader. If you can't hold drawdown, you're not going to be a profitable trader. If you start to be accustomed to drawdown and not letting drawdown make decisions for you, and leaving emotions completely out of it, just leaving logic, there's a reason why I took this position. Even though now that the hourly candle is closing bearish, I know that we're still above the SMA. We still broke lower high structures here. Price broke highs over here, so that's showing me signs that price can definitely push up. So now we're going to go down to a 30-minute time frame. On the 30-minute time frame, we closed bullish, but the next candle came down, started to give me a smaller range. So now we were sitting within this range, sitting right over here. So now, since I got in a little bit early on this position, you can also see this setup playing out right over here. So you have your no trade range, no trade range. You have safe buys sitting above these highs, and then you have risky sells underneath these lows. Hence why my stop loss is in the risky sell level. So now price decided to come down, tap into that SMA. So now I'm purely confident. Once I got that rejection of that SMA, that we're definitely going to look for a push to the upside. Price decides to come back up. Price decides to come back down, then give us the confirmation for safe buys. If you didn't take this trade over here, you could have executed buys above this resistance level and then look to target your 1-to-2 risk reward ratio. So price decides to go up and eventually tap into our 1-to-2 risk reward ratio. We closed our full position at that point and we moved on to the next trading day. Guys, we absolutely freaking killed it this week. If you're noticing, we won on gold, we lost on GJ, lost on US oil, won on gold, won on gold, won on Euro JPY, won on oil, won on GBP JPY, and I broke every single one of these trades in the trade recap playlist. You guys can literally go over there and watch every single one of my trades breakdown so that you guys can learn exactly how to catch it as well. But we also have the indices group, which it's all included. You don't have to pay a separate price for the indices group. All you have to do is just join all my trades and then you'll be able to get into the signal room. Indices results for the week, +7 R to R. We caught a NAS 100 1 R to R. We caught a NAS 100 1 R to R. These were actually break-even trades for me. This was a break-even trade. This was a break-even trade as well because I don't look to close at a 1-to-1. I usually look to close at a 1-to-2. And then I caught a +2 R to R on this one, but it actually ran up to a 5 risk to reward ratio. But if you guys do want to get my signals, all you guys have to do is click the link down below, be able to get it, all my trades right now for $50. It's only gonna last until the weekend is over, so make sure you guys join up that if you guys do want to be in that group. I can show you guys last week results as well. We can just go up here. So these were last week results. 12 R to R for the Forex group, and then for the indices group, 4 R to R on the indices group. So very simple trading. You guys see it. I break it down, bro. You guys, there's no reason why you guys shouldn't be catching these trades just like me. But I appreciate all the support that you guys show me, and I know that you guys will continue to do great. I know that everybody watching this video is a freaking hustler and you guys want to make it. So make sure you guys leave a like, make sure you guys leave a comment. If you guys have any questions, I'll be more than happy to answer any one of you guys. But I really appreciate all the support, and let's go into the next trading week. Love you guys. Peace.